That is the closing bell on Wall Street, and now it's market domination overtime. We're giving you full coverage of all the moves to get you up to speed on the action from today's trade. Yahoo Finance's Jared Blikre joining us now with the latest market action. Jared.
Thank you, Josh. Some decent size selling today. You see the Dow here off over 500 points or more than 1%. And I'll show you the intraday price action, basically from the upper left to the lower right there, although you can see we still finished off of those lows just slightly. Here's the Nasdaq down less than 1%. Pretty similar chart there, although spent a little bit more time in the green in the early goings. And the S&P 500 kind of in between there, down 0.9%. And I'll show you the Russell 2000, small caps too. Each of our indices down more than 2%. There's a Russell. Here is the S&P 600. And let's get a final read on the VIX. That was elevated today. You can see that was climbing as stocks were falling, and the VIX up about a few points there. It looks like about 2.84. Now let's take a look at the sector action. Only utilities closing in the green here. That's up about 0.8% to the downside. Financials the worst off, followed by energy, tech closely on its heels, materials also down by 1.5%, and then industrials and communication discretionary, each of those off a little bit less than 1%. And taking a look at the Nasdaq 100, Alphabet hit a record intraday high earlier today on the open, but did not finish with a record closing high. Nevertheless, that was up 3%, and Tesla up 1%. Pretty dark day if you look inside. In semiconductors, a few bright spots, but for the most part, a lot of red. And then in software, very similar story. Don't see any green in there, but I do want to leave you on a green note. So let's take a look at the pharmaceuticals. We got one there. And I also mentioned utilities in the green. So we'll take a look at that board as well. And you can see a nice slate of green to leave you on there. Back to you, Josh.
Thank you, Jared. Well, it was a tough day on Wall Street, as Jared was just mentioning there. Losses gaining steam into the close, but we did finish above the worst levels of the day. Looming large for investors, NVIDIA's upcoming earnings report and that September jobs report. Joining me now is Tom Hanlon, U.S. Bank Wealth Management Global Investment Strategist. Tom, great to see you as always. So let me get your take on the action we saw today, Tom. There's red across my screen here. I'm wondering what you think could be going on here. We do have, as Jared was mentioning, we got NVIDIA earnings on deck. I got the jobs report. I mean, could this be investors deciding, listen, I don't want to step in front of those freight trains?
Yeah, nice to see you as well, Josh. Yeah, let's chalk it up today to rate cut uncertainty, some profit taking, and high valuations through the parts of the market that you've been discussing earlier, like tech stocks.
What about that Fed meeting? I'm curious what you think's going to happen there, Tom. What will happen? What, in your opinion, should happen?
Well, it's not just the Fed meeting we get in December. We're also going to get the updated summary of economic projections. That's the Fed's estimate of where they see rates and inflation going. So we'll get an important update there. Josh, it seems to us that rates are kind of downward biased, whether it's the December meeting or January and there. We would expect the Fed to, again, resume their rate cuts as we either get to the end of the year or begin the year with their 2026 meeting calendar.
What's interesting, Tom, though, is you listen to some of our central bankers, at least, and I got to say, at least some of them, Tom, are sounding still concerned about inflation. Listen, we are above target, and they seem to be suggesting, hey, 2% is a target. It's not our suggestion. I guess my question is, what if we don't get that cut next month? How do you think the markets react?
Yeah, I think the market's already pricing in uncertainty about that. It's already down below a 50-50 expectation for December. So I think that's what you're seeing in the volatility is people taking that certainty of a rate cut in December out, getting the jobs data back with the government reopened. That's going to be important because the Fed, normally the labor market and inflation run in lockstep. You usually get tight labor markets and high inflation, but the Fed's got this conundrum where they've got weakening job gains at the same time that inflation's kind of sticky here around 3%. So they're kind of deciding which of the two ends they need to fight the most.
We're talking about the Fed, but my old colleague, Tom, Larry Kudlow, he taught me profits, Larry says, are the mother's milk of the stock market, right? So maybe I just follow earnings. And Ed Yardeni, he told his clients that this morning. He said, listen, earnings results, he said, they have been very strong. Forward earnings, he says, they're flying. Isn't that just good news? Maybe do I just stay focused on that if I'm a long-term investor?
Yeah, Josh, so earnings are going to follow spending, consumer spending, business investment. Those still are relatively strong here in the third quarter. And so you're right, you're seeing those estimates for 2026 continuing to go up. I mean, stable inflation is a little sticky, but downward bias short rates and high, increasing earnings estimates, that's the cocktail for higher prices, at least, in the intermediate term. So we would look at today as an opportunity to step into a market at a lower price, especially for folks that have been sitting in cash for a period of time.
How would you characterize valuations here, though, for the SPX, Tom? Would you say fair, we're stretched, we're looking extreme? What do you think?
Let's call it elevated, but not at extremes. But, Josh, we're also growing into that valuation. So pretty much across the board, you're seeing estimates go up across, large cap stocks, mid cap, small cap, and even foreign company estimates are on the upswing. So you're also seeing earnings kind of grow into those prices as well.
On the AI sort of boom versus bubble debate, Tom, I do know there's some folks who are throwing some warning signs, and specifically about how big tech tapping the debt markets to finance the AI build out. We did have a guest on earlier in the show, though, Tom, who said he wasn't as concerned about that because he said, listen, I'm not going to get worried about that because I'm just looking at big tech's balance sheets. But I'm curious what you think.
Yeah, let's call it, maybe early cycle, mid cycle here in terms of AI. I think we're still in the discovery process on what all the use cases are. As we listen to third quarter earnings reports from companies of all sectors, they're engaging with, highlighting how AI is transforming their businesses in terms of profit margin expansion or accelerating their development. I think also, Josh, if we look at what valuations are in the tech sector today, I think it's 34 times 2026 estimates on S&P technology. Back in 99, that was like 56 times. So again, this perspective that valuations are elevated, but they're elevated because of the growth expectation and this still discovery process in what AI can do.
There was this op-ed, I don't know if you saw this, Tom, in the New York Times by Rebecca Patterson, smart, compares our economy to a Jenga tower. I don't know if you, that doesn't sound great, Tom, right? And she says the economy, I guess her point is it's basically supported here, in her opinion, by AI and a wealthy consumer. And if that holds up, great, she says, but I guess basically that's it. And that, she argues, does sound kind of wobbly. And I'm curious what you make of that thesis.
If you look at the beneficiaries of things like the One Big Beautiful Bill Act, it's not surprising that materials and industrials are two of the three fastest growing sectors into 2026. So that's more than just AI. That's also the desire to bring high precision manufacturing back to the United States. It's the continued electrification. So I think we would argue that the economy is much broader than just AI and wealthy spenders. You do have a concentration of spending in upper income cohorts. But then you've had the Fed cutting rates twice now that at the end of this year. That's going to benefit smaller companies and lower income consumers that are much more sensitive to interest rates on things like that. So we still see this as a broadening economy and not necessarily just narrowly focused on AI.
So let me get you on this, Tom. Let's say a client comes to you and says, all right, on this stock market, Tom, what is the big risk I at least need to have on my radar in near to intermediate term? You would say what?
The biggest risk we see, Josh, is something in the labor market where you start to see, layoffs, materially increasing. We heard from Amazon and UPS and others about kind of the company specific, but the big driver of consumer spending, which is driving corporate earnings, which is driving prices, is consumers' confidence in continuing to have good, solid income and job prospects. So, Josh, that would be the one thing we would look at most acutely, is if there's any material weakening in the labor market, particularly layoffs.
Tom, good to see you as always. Thank you.
You too, sir.
Coming up, we'll discuss what Ford's new partnership with Amazon could mean for your next car purchase. That's next on Market Domination Overtime. For those shopping for a car, buckle up, because now you can buy pre-owned Ford vehicles on Amazon. And Yahoo Finance's Praz Submarinian join us now with more. Praz.
I actually kind of like haggling with you more than actually going to Amazon. But hey,
I love a good haggle.
If you don't like haggling, this is for you, right? So Amazon now partnering with Ford to offer, you can buy Ford pre-owned vehicles via Amazon. So basically how it works is you go on the site, you can browse a local dealer's inventory, right? You complete most of the paperwork online, and you go to the dealer, you schedule time to pick up the car, and they hand you the keys, and you
I'd go to the dealer to pick it up. That's where I'm
exactly. They hand you the keys.
Yeah.
There's no haggling. You do that. Now, For people who are Amazon users, that's kind of a nice thing. Ford says these vehicles are warranted depending on the age. Certified pre-owned vehicles, that's good there. Launching in LA, Seattle, and Dallas follows what Amazon did with Hyundai, which was also includes new vehicles. This is just certified pre-owned. But like I said, this is a good way for people that don't want to deal with the haggling. They like the Amazon just sort of mode of buying stuff easily through Prime. Sure. There you go.
Do you think someday Ford could offer the new cars on Amazon too? What do you think?
I don't see why not, but I think what happens is the dealers probably aren't so happy about this because it kind of cuts them out of the negotiation process. They just have to okay, here we go, give them the keys. I think they like to kind of add on their little bells and whistles, financial dealing.
Yes, we've all been there. Yeah. Let me ask you, I thought, we were talking about off camera though. See, I also thought it was sort of an interesting strategy in that if I have to go to the dealer to pick it up, I do then have a relationship with the dealer. And if it's a good dealer, right, then okay, I got this relationship, I'm gonna go to them to get it serviced. Who knows, if they treat me right, if they're honest, I might buy a new car down the road for them.
I think you're right. I think that's why the dealers are still part of this process. As opposed to going to a Ford distribution center and getting the car. Yeah. You have to go to the dealer, talk to the guy, service the car there eventually, and then maybe you like him or her.
Yep. All right, let's move on. Another story. Tesla, let me make sure I got this right because you wrote about this. Stifel, they're smart guys, they upped their target to 508. It looks like this is some of the parts, this is FSD, this is robo-taxis.
Yeah, some of the parts analysis here. Bullish call, right? 508 to 483. And this is a pretty big, compared to where Tesla's trading right now, almost $100 more potentially at the end there. So here, then Stephen Gengaro at Stifel, bullish on FSD and robo-taxis, talking about FSD saying, quote, the new technology, the new AI tech there is improving the system's decision making, improved jerky responses, kind of like stop and go stuff, and aids with stuff like finding parking spots. Not bad, right? Also notes that accident rates are much lower with FSD versus non-FSD drivers. And robotaxis, again, he's betting on management's bet that they're going to hit their goal of 8 to 10 new metro areas for testing. So it's a combination of those two things. Those are the big two factors. He notes that there's some price weakness now with the cars after the expiration of the EV tax rate, a lot of competition.
Well, I want to ask about it because it's a robo-taxis. And we've had plenty of bulls come on the show in that very seat. That's a big reason for their take. But what is his take on the EV business, which is still driving the P&L?
He claims that still pretty good margins, saw some ASP or average selling price kind of downward pressure, thinks that the new standard Model Y and standard Model 3 will help drive sales even at a lower price point. But I think it's a big question to ask. I mean, this is the main money maker for Tesla. You're seeing the loss of the tax rate, new competition, prices coming down, eating into margins. How long can that last? And then you still keep this pretty lofty valuation. I know people are betting on AI and robotaxi and FSD. That's still the big bet. But like you said, if the money's coming down, how long can I keep sort of gambling on the future? And I think that's where the bulls and bears are disagreeing.
What'd you make of, finally get sharing this, Musk's old buddy, Peter Thiel, PayPal fame, right? Kind of making some moves with his Tesla holdings.
Yeah, I mean, cut them down considerably. With the 13F filing in Q3, basically he owned about 580-ish thousand shares and took that down to 65. Right? So that's a 76% downward cut in his holding. Those guys are buddies. Musk and Thiel, as you know, go way back to PayPal days. Yep. What does that signal, right? And then also combine that with NVIDIA, the total wipeout of that.
Liquidated his entire NVIDIA
total wipeout of that position. What does it make you think, right?
Yeah. All right. We'll see. Yeah. Peter Thiel, welcome on the show anytime to discuss, obviously.
Anytime.
Thank you, Pras. Appreciate it. Well, Vita Coco shares pulling back after surging earlier in the trading day. The company released a statement on tariff relief, saying the average tariff rate for its products will decrease from 23% to about 6% after the White House announced relief from reciprocal tariffs. Michael Kerman, the Vita Coco company co-founder and executive chairman, joined Market Catalyst earlier today to discuss.
We've been paying tariffs on incoming product for the past months. And we have inventory. So this is, it's not going to be very meaningful or material to this year. It's really going to be helpful in 26, both for the company, but also we were planning a large price increase for next year. So now we can continue to offer, healthy hydration to consumers at fair prices, which we're excited about.
Had you already raised the prices this year to account for some of the tariffs?
We took some small pricing earlier in the year to mitigate the initial 10% baseline tariff that we had seen. But that covered a small portion, so. Yep.
And you all, it's my understanding you also did quite a bit of sort of jigsaw of your supply chain. So what did you do, and what does that unwind now look like?
So it's not really an unwind. Actually, as of now, there's still a tariff on Brazil. Most of what we were doing is trying to move production from Brazil, supplying the US to supply Europe and Canada, so that we didn't have the 50% tariff that we were looking at from Brazil. So now that there's zero tariffs coming from all other places, and still 40% from Brazil as of now, we'll see what happens, it actually worked out quite well, because now we can supply some of our European business and some of our Canadian business with Brazil product.
Talk to me a little bit about how coconut water is made. I mean, besides just cutting open the coconut, like how many coconuts do you need to make a carton of Vita Coco?
So one carton of Vita Coco is just over one coconut. But we're cracking 4 million coconuts every day for our water. Wow. And a tree, you'll typically climb a tree and get 4 or 5 coconuts out of a tree at one climb. So think about how much that is throughout the course of a day and the course of a month that farmers are picking coconuts to supply the market.
And do you guys own your own supply, or are you buying from farmers?
We buy from local farmers. Most of these are small family farmers. One brother might climb the tree and the other brother fishes, and that's how they support the family. And so we've done all these programs in these farming communities, from agricultural programs, helping plant seedlings and helping improve yield on the farms, to building schools for the kids in these communities, specifically in the Philippines and Sri Lanka. So it's an amazing thing to be able to build a business, a profitable business, and be able to actually give back and uplift communities.
Yeah, and how do you think about sort of sustainability of the coconut farms that you're sourcing from also?
I mean, the beauty of coconuts is you don't cut down the tree. And it's harvested all year long. And the water historically was a byproduct. So we're now taking a byproduct of the coconut manufacturing business and upcycling this byproduct and offering a market for it. So increasing the value of each coconut that's picked.
So Vita Coco, I think most consumers are familiar with your product now. You guys have been around, what did you say, since
21 years.
21 years.
Yeah.
How did you come up with this idea?
It started in a bar, but it really ended up on a beach, drinking out of a coconut and seeing coconut water in Brazil. This was in Brazil. Coconut water everywhere. People were consuming it for hydration. I mean, this is a product that has 3.5 times the electrolytes of a sport drink. So it's incredibly hydrating, incredibly functional. They're also mixing it in cocktails. They're also drinking it for a hangover. They're drinking it in their coffee to make cold brew out of coconut water. So all these usage occasions, and it didn't exist at home. So we were thinking there's got to be a market for it. We thought maybe we could build a coconut water market in New York. That's where I lived. And I brought it back, created a brand, brought it to the US. We started selling it, and now we're operating in 30 countries and building what has been, I think, for a lot of the last 20 years, somewhat of a niche category. Really feels to be transitioning into a mainstream household staple across all of our markets, whether it be the US, Western Europe, Canada, whatever it might be.
And you guys are also expanding more into other coconut-related products, right? So how is that, what sort of percentage of sales at this point is the core coconut water versus these other products, and how big do you think they're going to be?
So the vast majority is the core coconut water, as coconut water becomes, like I said, more of a household staple. But we launched a product this year called Vita Coco Treats. It's a coconut milk-based product. It's quite indulgent and delicious. It's skewing very young, after school, grabbing a hydration treat, and it's coconut milk-based. And if we think about, for example, our growth in syndicated data, it's adding about 4 or 5 points of growth to the total beverage business for us.
I was looking at one of those products this morning. There's a lot of sugar in there. So it's definitely quite different.
Vita Coco Treats.
The treats.
Yeah.
In terms of the difference between what I think of as Vita Coco as a healthy product, as you say, more of a sports-oriented, versus these treats. Do you worry at all about sort of brand bleed over, considering it is not a healthy thing?
It's not unhealthy. Yes, it has sugar, but it is, it's coconut water, coconut cream, it's natural products, there's nothing artificial in it, and it's just a delicious product. And we're seeing, as you look around the world, if you look in China, for example, you go into a coffee shop, 5 out of the top 5 beverages are coconut milk-based products. They're not coffee-based products. So people are using coconut milk as a refreshment, as a product to drink, like for an indulgent type of refreshment product.
Is there any plan going forward? I mean, Vita Coco, I have to say, talking about it with the team after we booked you to come on and talk, you've been public since 2021, and I think there was a little surprise among people that you weren't part of a bigger beverage conglomerate. How do you think about whether you want to stay independent and those types of opportunities?
Well, I think the category is in its infancy. So if I'm thinking about long term, I started this business with a friend of mine. We still operate the business, and we've built it into what it is today. And I think about the business long term. I think there's just so much opportunity to continue to grow coconut water as a household staple, and more consumers using it for more and more occasions throughout the day. I like it, I mean, I can, operate the business as a public company. Shareholders can come and go. People can have liquidity when they want liquidity. So it's a really nice, I think, way to operate and build a business for the long term.
And finally, you and I were chatting during the break. The stock is near a record, we should mention as well. And we were also talking about how a lot of companies that came public in 2021 have had very volatile journeys. So how do you think about the stock? I mean, you must be happy that the stock price is where it is.
Yeah, I'm happy the stock price is where it is. It's performing well today. But to be honest, it's about growth. I mean, we grew 37% in the quarter. We're up 20-something% year to date. There's nothing outside of tech that's growing like that. So I think when you're growing a business this fast, investors are excited about it. And we see a long runway of continued growth as we continue to expand globally and build the business here in the US. So we're excited to see that continue to develop.
Have you seen any kind of, we talk a lot about the K-shaped economy here. Have you seen any kind of demand erosion, particularly for lower end consumers?
We haven't. I mean, with that type of growth in consumer, if you're losing some consumers at some level, it's hard to recognize when the brand is growing so fast. But I think today people are paying for functionality. If you look at beverages, protein, energy, and coconut water are the only things that are really growing in the beverage aisle, and those are the most functional products, and they're also not the cheapest products. So people are spending, they're digging into their pocket to spend on things that actually function and work for them, like coconut water as opposed to a sport drink, for example.
Time now for what to watch Tuesday, November 18th. We're going to start off on the earnings front here. We'll be getting some more reports on Tuesday from names including Home Depot, Baidu, and Klarna. Home Depot kicking off a big week for big box retailers and announcing results for the third quarter before the markets open. Analysts expecting Home Depot sales to rise about 1.4% in Q3, with some slowdown coming from fewer hurricane-related purchases this year. Consumer spending will be a key focus. Home Depot is seeing steady strength across its business, but shoppers are pulling back on expensive home projects. And taking a look at the Federal Reserve as well, some more commentary coming in on Tuesday from Fed Governor Michael Barr. This is coming after comments from Fed Vice Chair Philip Jefferson on Monday. Jefferson saying that the Fed should proceed slowly with any further easing. And finally, we'll be getting a read on home builders on Tuesday with the Home Builder Confidence Index. Economists forecasting no change from October's reading of 37, signaling that the outlook for builders isn't getting worse, but it's still historically weak here. And that is going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell. But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market-moving stories. Stay tuned.